Hi traders, and welcome to Pepperstone's technical analysis wrap on Friday the 8th of May. So I've seen some really good moves this week, moving on from the webinars that we did on Wednesday night. We've had some great moves on some of the majors and some of the scalping opportunities that we identified. So we'll jump straight into the charts and see if there's any more movements that we can get hold of before the non-farm payroll results tonight. So we'll start with the Aussie on the daily. Not a lot has changed here. You can see that we've got, it came and bounced off the moving averages that we thought it might do. It is pretty good support here for it, but it's tracking higher. Look, there's no question it's still making higher highs and higher lows, and until this fails to make a new high here and then potentially breaks down past these zones, we're not going to be convinced otherwise. So really it's just a case of waiting and seeing. But you know, on Wednesday you could tell that it was over on, obviously on the moving averages. We weren't going short. We've got a trend line there. We can put that up anytime you like. It's really a channel. I mean, if you put up I'll put up the drawings for it, and there's no question it's been channeling up, and the higher highs and the higher lows have been playing out really nicely, as you can see. So you know, there's no worries that it's actually playing the game for the long term, but it's still got a little bit of work to do. Obviously it needs to make a new high above this level here, so that's above the 65.50 for us to be convinced that it's going all the way up to that 67. That's the real target. It's going to find trouble at the 200, no question, but the real target for this particular pair is definitely in the 67 zone and the 67.50. So a little bit of work to do, but in order to convince us, it needs to make a higher high here before we get involved. Or if it's going to go down to the short, we're going to basically look for a breakdown past this level, and that will give us a high, a low, a lower high, and then of course a lower low. So they're the two scenarios that we've got for the Aussie. You can do either just as easily. I'm not really biased on either end on this one at the moment. So yeah, whether it breaks up there or breaks down here, happy to get involved in that one because it should still be solid. Okay, we'll go on to the US dollar CAD. So this has been a good trade. I know a lot of people have been involved in this one, and it's been playing the game fairly well. It's been fairly steady without blowing anyone up. You can see here that we've got the a little mini double bottom here. Certainly went up. This was at around the 138.80 area. You got basically 200 pips move. This is a daily chart, of course, so it's a pretty big move. Failed to make the new high. Okay, so that was probably the expectation that people thought it was going to. And in order for it to be going along, it certainly needed to break that high. It hasn't been able to do that, and then it has sold off. So yeah, its next move is going to be crucial, because if it does get down and break a new low down here, and by that I mean the daily close, below the 138.50 at the very least, that's going to mean it has to break the 50 moving average and this strong support level. If it does that, we've also got our sequence of lower highs and lower lows, which is basically telling us this is a change of trend. So certainly one to watch out for. In order for this to go and make the new highs that we were looking for not that long ago, it needs to obviously turn around, probably find support on the 50 and track up and make a new high, but it does need to break these levels. Okay, so until it does either of those, you can probably trade it in a range bound sort of effect, so scalp it to the support and scalp it to the resistance, whichever way it goes. But I wouldn't be inclined to be picking a direction on this one, because it doesn't really give us any evidence of what it's going to do. So scalp it to the resistance and scalp it to the support, and just work within that zone until it tells us otherwise. Still a pretty good trade. There's plenty of trades to be had in there, especially on the smaller time frames, but you want to be making sure you draw up these zones and operate inside those on the smaller time frames. Okay, we'll go on to the US dollar Swissy. My favourite pair. I can't believe I'm saying that, but currently this is my favourite pair. It is just playing the game at every opportunity. It's just been unbelievable. You can see here that every time it lands at our support zone, it bounces off. It always goes to our projected target, which has been the 200 most recently. The scalping, it's been basically a week of up on it. Now, I know it doesn't look like a lot, but you're still getting basically 160 pip movement. And that's, and in scalping terms, that's pretty good. Like and they're very firm. Like, it's done it so many times now. Like, it's been playing this range for so long. Such an easy trade to get into. Basically buy off the support, sell off the resistance. It's not giving us any clue whatsoever as to whether it's going to go long or short in the medium to longer term. So there's no need to actually try and preempt it. Just trade what you see. and it's giving us very, very clear lines to basically operate inside. So a very, very easy trade, and I'm hoping that a lot of people are getting involved in that one, because scalping doesn't come much easier than that. Alright, we'll go on to the US dollar yen. This one's been tracking lower for the best part of a week and a half now. You can see here, it's not coming down with any extraordinary force, but when it did break that zone that we talked about, I'll bring this line up for us so I can make it a little bit clearer. Okay, when it did break this zone, it took a while, but it did eventually get there. It came back, gave us obviously the retest that we've been talking about, which was amazing. And since then, it's just been meandering all the way down. Not with any great significant force, but just working its way down slowly. It reached a low of basically 106 flat. Really, it's trying to it's really trying to rebound off this area. It is a little bit of a zone for it. Like there is a little bit of support here, but you have to go out a fair bit to really bring up the support that's sort of in this area. And even then, it's a little bit suspect, because the support is the really good support is actually quite a bit lower at the sort of 104.5. So, it's going to be a difficult one to see if this one holds at the 106. I don't expect it will. I think that what it will potentially do is come up and probably test the 20 again from the upside, and then maybe look for selling opportunities from the 20 down. If it makes a new low past here and closes, if we get a daily close below this level here, below the 106, it should be good to hopefully fall another 100 to 150 pips before it reaches a real support at around that sort of 104.50, which is a very strong zone for it. So with this one, not really looking for long opportunities, just continuing on for the short every time we get a reason to do so, and obviously a touch of the 20 is generally a pretty good reason, and just a watch and see with this one. Okay, we will move on to the S&P. We'll go to the US 500 first. Alright, it's been around this zone for a little while now. It's still been playing the game. We know all the stories around it, so we just focus on the technicals today. It's sitting at obviously a place of very, very strong resistance. You can see that it was very strong support over here. It's been support here, eventually broke through, came and retested it. Been resistance here, and now it's proving to be resistance here. Given that there's like 100 million people unemployed, it seems, in the US at the moment, it's amazing that it's here. I would have thought that data, although expected, was still very nasty. But we do have non-farm payrolls tonight, so we know that's the biggest news event of the month. So be very, very mindful, and this goes for all of the pairs, that obviously everything's going to be probably a little bit slower today until they are ready to release their non-farm payroll numbers. Okay, so and they're going to be horrible, of course. It's going to be basically down to interpretation as to how horrible they are. Are they even worse than expected, or is it going to be not too bad? So we've got to wait and see on that one. But again, very strong resistance here. There's only two ways we're going to play this. If it makes a new high above the, for me, it has to get above 3,000. It's got to close above 3,000 for me to be convinced that this trend is not going to stop. It's not my ideal long trend. I don't like it because, it seems very artificial to me. But, we trade what we see, as we always say. So if it does break up above the 3,000 and closes above there, so maybe 3,010 would convince me, so it's not a fake out. I will go, because that'll mean it's getting past this level here. Then I'll start looking at longs. But the more likely scenario, and probably what everybody is hoping for to make more sense, is that it will come down and make a new low down here. So I'd like to see a low close below the 2,700. If we get a candle close below the 2,700, then we've got our series of high, low, lower high, lower low, convinces us that the trend has changed, and then we'll be looking for the next serious support zones, around the 126, and probably even lower at around the 226, sorry, and the 224 areas. But it's a wait and see. It's got to make a new low down here first, and until that does it, we don't want to be an active participant in this one. All right, we'll move on to gold. Gold has been, again, the gift that keeps on giving for scalping traders. You can see that it keeps bouncing off the same support level. It's done it many, many times. Hopefully everybody's been able to get these. I mean, even the targets are getting clear now. Like initially we thought it could push fairly high, but it seems to be pushing these targets at around the 1735 to 1750, pretty regularly. So fairly easy trade. The 20's holding it up, as we can see. What you want to be doing is probably, I'm not even sure I want to be selling this one even though it is, you know, finding trouble getting past the 1730, it's going to take a fair bit of, you know, convincing for me to want to be selling this one at this level, because to me it still looks long. You know, and if it does, you know, end up making a higher high here, it could be the catalyst to push it to the 1800s. So I'm more looking for long opportunities on this one. Every time it comes down, touches this roll reversal area, you know, with the 20 to bolster it up, look for a potential long opportunity. The only way I would be shorting this one is if it happens to make a new lower high and lower low sequence on a daily, but that's going to involve getting past this roll reversal zone and getting past all of these MAs, because until it does that, I'm certainly not going short on gold. It's got a lot of convincing to do to make me go short on this one. Alright, the final one I'm going to look at today is the pound dog. This one caught my attention earlier in the week, and it's technically at the level that we set for it now. So it's a do or die for it. It's certainly at a very, very strong support level now. The 190 pretty much flat. It's obviously a roll reversal zone, very, very strong support. It's also got the 200 moving average right in its face, so we know how serious that is. You know, all of you should have already been in this by now. It gave us all the signals. We talked about it on Tuesday, so you know, that was about 300 pips ago. So it's got a bit of work to do before you jump in it again. But its next zone is definitely, you know, still the best part of, you know, 400 pips away. If it does happen to break this zone, the next level for this one is around this level here, which is previous support levels, okay, which we would expect to be support again. Now again, that doesn't look like a lot on a chart, but yeah, that's the best part of 350 pips. Okay, and it's basically done that in 2 days. So what we want to see is obviously a continuation. We need a close below the 200, and below, at the very, very least, a close below the 189 sort of 80 area to convince us that it's going to break that level. Even if it does, I wouldn't be surprised if it came back and retested it. So if it came back down and then came back up again, tested it from the downside. But to me, you know, that would be an even stronger signal. So yeah, either way, you can trade the initial break if it does it, or also the break and the retest if it does that. But keep an eye on it. It's done a lot of work in the last few days. It's at a very, very key zone now, so it's a bit of a watch and see. Yeah, if you want to look for maybe a long opportunity, if you see a small change of trend to the upside on a 1 hour, perhaps you could potentially trade it back up to the 20 and look for a shorting opportunity again. But in an ideal world, we'll get a break here soon, and we'll hopefully continue to push on down. Alright, so I hope everybody's had an awesome week's trading. We've had some really, really good opportunities. Hopefully everybody's caught them. And just remember, it is non-farm payroll tonight, so we want to be mindful that the moves aren't going to be big until probably about 10:30, 11 o'clock tonight. So look for your scalping opportunities, keep them fairly short, and make sure your stop losses are set well for the weekend if you're not going to trade it, to make sure we don't get any adverse moves. Have a great weekend, everyone, and I'll see you next week.